Okay, we have a reversal day and pretty big one. So the question is, where do we go from here? Well, starting with the Qs here, they had the big decline. Well, they had the big advance, and they gave it, well, they didn't give it all back. Let's just expand this a little bit, put it in the context of what happened here. But it was a deep retracement, and the weekly chart puts it in perspective, but it came down to this prior pivot low, the swing low there, that price support. And as mentioned yesterday, there was the wide range bar the prior day on the volume. So the pattern prior to yesterday was suggesting at least stabilization and potentially a turn. It's interesting how, over the years, it's always been interesting how when the technical setup, the news just seems to emerge, mysteriously. And then here comes the turn. So as I said, like now what? So more futures, we'll get to the futures. They're down here a little bit after that report, but you can see where the Qs are rallying up into this resistance area right there. So it makes sense that there'll be some congestion or sideways move. We'll see what it does here now. But yesterday was a relatively wide range bar, but negating the big down bar there. So bullish. So we go into, factory work mode analysis as to, all right, what happens now? Well, it could just keep going up. It typically isn't what happens historically. Usually you get a consolidation day. If it does go up, it probably pulled back today, intraday. So I've marked off a reference point for us to say, well, if they gap down, well, they're not gapping down. The futures here are actually up, but they were up higher. I think the YM was up about 160, 70 points or whatever. So down a decent amount from the high, but no real damage done to the daily chart of yesterday. So the Qs, just to get a reference point, if you don't have futures, these overlapping bars here, if they were pulling back, I suspect that buyers would show up there and try and push it back up again. So preparation. Where might buyers step up? You look at your chart, you see where there's support, just like here, where's support? There was support here. It held and then failed, and it went down to the next support to the left, and now it's stabilizing. So with a big green bar reversal here, our bias changes to, intraday anyway. This is still in a downtrend. Weekly is at a turning point. We'll see if this is a bottoming tail bar by Friday, or what it looks like, since this is in the process of being made. It's not done yet. But with a bias now of, because of yesterday, buying the pullback makes sense. Buy the pullback to where? Well, look to the left. Same thing, smaller time frame. This congestion here is where buyers should show up. So we'll see if it gets down there, and then we look to see what's happening on a smaller time frame. Could be a pattern like this. We don't know what it's going to look like, but bar by bar analysis. Remember last week's MT Live, bar by bar analysis. Doesn't matter what the pattern is, what you call it. Could be something you never saw before. Bar by bar analysis will tell you what to do, when to do it, and so on. And money management will tell you when to accept you're wrong, because you'll know where to put in a stop is. But theoretically, based on what we're seeing here, buying the pullback certainly does make sense. All right, let's go to the spiders. Same story. A bit more impressive. It didn't get down to that pivot low, but it got close, and buyers stepped up again, and it gapped up to the prior 2 bars highs rather than inside that prior red bar on the Qs. And so it rallied up, and we do the same thing. You see the 60-minute looks somewhat similar. You have the pullback on the weekly and the reversal, green bar reversing. Let's see how far it can get into the red bar, retracement into the red bar. But on the hourly, okay, we've got a bit of a pullback beginning. If it continues to pull back, right, 279-ish, give or take, maybe 280. We don't look at exact points as traders. That's what the holy grail people do with their fibs and trend lines and, Gann lines and squares of 9 and so on and so forth. We look at areas to the left as to where there was a reaction and buyers stepped up again aggressively, and we look for that to reoccur. It's that simple. So if prices continue to pull back, 279, 280-ish, we should see buyers begin to step up. And that really would just be nothing as far as the wide range bar, retracing back into here. So with a wide range bar like this, powerful bar igniting, I'm looking at this, well, should have been more volume, but nonetheless, things happen without the explosive volume. But as long as this stays in this area, the upper half and ideally the upper third, the opens and closes, it's just consolidating after the big move. Still in a downtrend, weekly trying to make the turn. So this isn't likely to explode higher without some type of chopping around. So just keep that in mind. Diamonds, same story. You go through this and you see similar patterns. This is obviously weaker. So this kind of like a fly in the ointment is, can the Dow play catch up? You remember how we talked about playing catch up with transports and the Russell and so on. And a lot of times they did. Sometimes they try and they falter, but that's trading and investing. There aren't guarantees. So this year we'll see if that can play catch up, but we still got the big wide range bar and the same analysis. Russell, right? Same thing. Look for the congestion, wide range bar, so on and so forth. This broke down. It's reversing there. So this has been damaged, right? Whether this can get back up to the highs, who knows, right? There's a lot of congestion up there, and traders that have holding losses now, where this was trying to break out and it failed and it went down. So this is a bit of a mess. Whereas the Qs and the spiders are, better looking charts to be trading. However, intraday, the reaction probably going to be pretty much the same, but you can see the move up, pushing up into the resistance to the left. Nothing fancy there, just same old price resistance over there where there was sellers there. Sellers are showing up again. And transports, right? The laggard, they broke down through support, but had the same reversal day yesterday. Everybody was at the party. They should be able to continue back up again. We don't really get very clear overnight trading because they don't do very much in the transports overnight. So we don't really have the patterns there, but you could see, coming up into the resistance to the left and beginning to falter there, but a nice reversal. We'll see if this green bar looks like this at the end of the week. And if it does, that's a pretty potent reversal bar. All right, it broke down through major support. So damaged goods, we'll see how far it gets. We're not dealing with, everything in uptrends now. It's a different market environment after the correction. We've still got the uncertainty of the tariffs. They were forgotten yesterday, but we've been experiencing this now for months where one day is, horrendous depression, markets crashing, and the next day everybody forgets about China and the markets rally for a few days and so on. So it's just the environment that we're dealing with at this point in time. But these are pretty impressive reversals and suggest that the market has at least put in a short-term low. We'll see how far it gets. I'm just curious. I didn't look at this yesterday, but okay, this came back as it should have. Remember the 1, 2, 3 continuation? We had this in the letter looking for this to go up, but the markets faltered and it came back down and it kind of held here. So this looks like it should be able to continue to move higher, even though it's a mess. Maybe a couple of days of consolidation there. That'll set it up to do well. Security technology, nice reversal. We saw that yesterday, was on the 200, pulling back here a little bit. But again, we look for agreement between markets that should have agreement, meaning everything's starting to move in one direction. we want to see that they're in agreement. And internet came back strongly with, all the news. They're still talking about the breakup of these companies. We'll see what happens with that. Amazon broke down through its 200, had a nice reversal day yesterday. Facebook, not so impressive, but still a reversal, holding the 200. And Google, not too impressive there either. So better places to be than these, but hard to imagine that they don't bounce if the broader markets are going to bounce. Let's take a look at the futures here. So slowing in momentum. And the way we tell that this slowing in momentum, and here's a nice move, continuation, and then the next break, and then it barely gets going. You can see the distance here before the reversal and the retracement there. So that doesn't mean the move is over, but when momentum slows, we know there's some resistance here. It must be over there to the left, right? So if prices were to pull back, the same thing as we looked at on the spiders, if the futures pull back into this area, buyers should begin to show up. And we'll see as the day unfolds. And Qs, right, got to be pretty much the same. You can see the momentum has slowed. It's in an area of price resistance, right? That's the area. And the same thing. And you'll see where it pulls back to. Here's some congestion. Well, what was resistance should become support. Technical analysis 101. Of course, this pivot low here that's formed, we'll see if buyers want to hold that. If not, maybe just comes down to the next level where, based on this daily chart, buyers will show up again. And same thing with the weekly. We'll see if it looks like a bottoming tail bar at the end of the week. Dow, same story, right? Hit the 20 MA on the daily, pushed up through the 200 here. Still early. You can see how it's stalling. It's chopping around. It's got all of this mess to deal with. So if you're new to the markets and trading, you might think that yesterday will repeat itself today. It's unlikely. So put it in perspective. After a day like that, there's usually some consolidation, especially in a downtrend coming up into resistance. If this was coming out of a base, it was going sideways and you got this kind of a bar breaking out, well, then, yeah, it's possible you'd get another day pushing up. But with this type of trend, historically, that isn't what happens. Bonds are up here a little bit. They had the reversal day down. We talked about this is what should happen if the market was going to rally as we looked at intermarket relationships. We talked about that earlier in the week, and I probably even last week. Sometimes I forget what I say. I'm just talking a lot. But we talked about the pullback, the move up, the wide range bar last week coming up into resistance, and that this should pull back. And if that was going to pull back, that should support the markets, and markets would rally. And oil is having a hard time getting off the mat here. It didn't get all the way down to that prior low. It doesn't have to hit it, but the way it's hanging here and didn't move up, it's kind of the fly in the ointment for the broader markets, I think, in that if oil starts to break down through here, I think that's going to get the attention of equity traders. And if bonds actually rally above here and oil is going down, I think my thinking is pretty certain that we'll see the equity futures pulling back to those support levels, and then we'll see how buyers step up at that point in time. And gold, amazing. It came back to life. Now it's pushed right up into this prior high. That is a hell of an impressive move over a few days, getting through that chop like that. It did have a lot of time flip-flopping around here, and buyers just showed up again right up into that resistance. So I think it probably stalls here, but whereas the majority of the gain that's happened over the few days have been had, so it doesn't really make sense. It would actually probably be foolish to be jumping on board to chasing this at this point in time, unless you're a very short-term trader intraday and can handle, some fast moves. So, and there's a lot of movers here, pre-market, some quite negative. And just glancing at Tesla there was some news on that today. Some life in Tesla within that pretty potent downtrend, weekly beginning to stabilize here. And some nice movers. Amazon up 15 points, Nvidia up a couple of points. So some follow through from yesterday. We'll see whether overnight buyers or holders sell into this and what the reaction is with the markets having lost momentum, as already mentioned, and what's happening in bonds and crude oil and all these things that we monitor as intraday traders to zero in on these turning points. So internals, well, as we spoke about, right, sentiment is perfect. The alignment coming here where the wrong way option traders just betting on the crash at the worst possible time. Historically, their track record is just unfrickin' believable. It's amazing, and but as I said yesterday, surprisingly, breadth did not get down to the minus 200. It's still in the bullish area. So while not perfect, meaning just getting down, the internals are acceptable. They're good for a turn here, especially sentiment. So that's all good. Now, that said, as I'm looking at this, it's like this better pop up here I think by the end of the week. Historically, what happens, Debbie, is that at a turn like this where breadth is down in a bullish area, the markets rally as they did. We have this alignment and the markets they rally as they did. And so let's assume the spiders get, by the end of the week are able to push up to the 20 MA and into this area here. What you want to see from breadth is that it goes from the bullish level to the bearish level in a few days, a very short period of time. And while it's at a bearish level, it's actually bullish because of the speed at which it got there. So, and sentiment, we'd like to see it just stay down here for a while. So we'll see how that all unfolds. We'll be looking at the day-to-day sentiment to see, if these option traders start loading up on calls right away. And that's how we read the tea leaves, putting what I just explained all together, short-term analysis, intermediate term, and long-term. And that's the master trader approach, putting that all together, right? Not looking at trend, Alex. I've kind of over the years narrowed down my focus to a few things. I could bring it on this platform, but probably better to look at. And I don't want to take too much of Dan's time here. Where the hell is it? Reload, remove studies, insert study. Would be to look at volume as it relates to how it's moving up and down. And let's look at something else here. Again, taking a little. This is a long-term breadth internal, and up down. Yeah, NASDAQ, New York up down volume. All right, so there's a few other internals. And so we've gotten down into the bullish area here. That's a longer term measure. And this might have a little bit more to go. So any retest here. This would push that down here. This would come in, and I think things would be like magically aligned at that point. So we'll see how it all unfolds. And of course, we'll let you know. All right, Dan, all yours.
All right, thanks. Good morning. Yeah, we definitely were pushing the throttle yesterday, and it was on the bullish gap. It was the 1 hour high, and it was those cooked internals that you were talking about. Let's see, let's do opens as usual. Weekly options traders, we have a record number of opens, believe it or not. We have 13 opens in there, and I tell people that our average per week is 4 to 7. We've had some active weeks where we've had 10, but have 13 opens at once. Wow. Netflix put spread, it's fine. Avgo coming out of that little retest, it's fine. I'll be tightening stops. Spider put spread looks beautiful. And we did the TLT, bonds with the bear gap down. The call spread for Friday, that looks good. Amazon put spread, that looks great. Gapping up, whatever, 15, 16 points. TTD we found in scanning. Look at that rocket ship. Wow. Alex, my personal account when I was in Irvine, my personal max was 48. But I don't want to get our subscribers into 29, but for obvious reasons. Facebook, we had a little reversal, 3-day put spread. Apple put spread, it wasn't a directional, it was clawing into resistance here, but we got a beautiful gap up. We'll probably take half on that. And these expire tomorrow. These are all short term, except NVIDIA. NVIDIA I did for next week, 135, 125 for $1. Anthem put spread for Friday. Shop, this is our only call spread, and I mentioned yesterday that it's a problem child. Shoot, and now it just rallied another $1. And so this is our problem child. I just sent a text alert saying I would keep an eye on it. Subscribers who are in it are looking for guidance, and we're here to give it. And it's not looking good. It looks like yesterday we had a group discussion saying, is this a put spread candidate? And we all agreed that it wasn't. So I couldn't do an adjustment yesterday, but I did say it was on probation and that I would, make the adjustment today. STZ, we stole the put spread over Friday's high. Finally, AMT. So those are all in the weekly. The swing and options trader. You did a put spread. All right, well, you're braver than I. We talked about it. It was not a master trader bullish pattern. Compare those to the other 12 bullish patterns I just gave you. All right, so we have I gave spiders and NVIDIA to the swing letter also yesterday, just identical trades. CPRT, the put spread hit on this. Gulf Hotel, we're long stock. That looks beautiful. And we rolled the 85s to the 90s. That was a no-brainer roll for 30 cents. Bravo Romeo, this one came from McGraw. I like it, so we joined them. GWR, covered call, is doing its job. Arna, cannabis stock, had a beautiful day yesterday. And finally, our solar longer term trade. So everything is fine except this stupid shop. But that's what do we have? 22 open positions and 1 problem. Yeah, Cron, you said had an upgrade. I saw it because it's in my permanent list here. There's still no pattern though, but it's worthy of a watch. It's a buy setup on the monthly. GIII had earnings. It's a mess. AEO. 20 bucks, gapping way up here to resistance after 3 up bars, nothing to do. McGraw sent me LMT, and I told him, I said, yesterday that was a no-brainer trade, and I just didn't see it yesterday. And that's a bull. You got a bull gap here, multi-month resting, and then boom. Yeah, well, look, we can look at pot stocks today. This must be a bio. I just saw it on the ticker. Look at that. Can you imagine the headache you would have right now? 37 bucks, and you wake up and it's $4. iRobot 92, McGraw. It's lagging the market, but with today's gap, put the spread candidate. Shop. I have it on the other screen. I don't like the way that's trades. Leave. Yeah, we had this as a 1, 2, 3, and then I canceled it because of the deep retracement. But now 2-bar reversal. It's a put spread watch again. GME earnings or lack thereof. That's getting whacked. I got no interest. This looks like a penny stock toy. I'm not messing with that. Roku, I know one of you mentioned you're watching this yesterday. If you're in it, you got a nice gap on your hands. It's a Roku put spread candidate, Whiskey uniform. Beautiful bar. If this sets up as a 1, 2, 3, then that's a no-brainer 1, 2, 3 for tomorrow. AMD gap breakout, we'll come back to that. Info, why do I have info on here? I don't know. AEO, I mentioned